Little did I know the economy would burst and the housing market crashed in 2007 through 10, in which a lot of people were overextended on the types of homes they were buying because the underwriting guidelines were allowing people to buy homes with stated income, stated assets, sometimes no jobs. Basically, if you could steam a spoon with your nose, you were giving a mortgage on a home, and people were extending their means of living. So in 2010, when the values of the homes depreciated substantially, we saw the biggest foreclosure rate in the history of the industry that I'm aware of. Um, since then, the Dodd-Frank Act and a lot of other consumer protection agencies were developed to prevent that from ever happening again. It was supposed to simplify the process of buying a home. In reality, it doubled the paperwork. Everybody has to be involved now. Even if they're not on the mortgage, but they're going to be on the title, they have to be at the closing. Power of attorney for signing in your absence is very frowned upon nowadays. They want you at the closing table. So we've seen a lot, and we're currently now, this is the third wave of the next industry crash, as I would like to call it, based on, we're in the middle of a economic fallout that's, I hope, recovering quickly. And the rates are expected to drop in the next year. However, there's no time to wait for that to happen. It may never happen. So this is the best time to buy a home. Housing prices in Atlanta and actually all of Georgia are pretty stable. We might have declined maybe 1% to 2% at the most in comparison to New York, California, Michigan, some of these other states where they've dropped already 5-6% in the house value. So now that rates are stabilizing in the low to mid sixes, housing prices are stabilized. We're starting to see a little bit more inventory meaning more houses to buy, because people are thinking, all right, I think we've peaked on our value, and this is about the best the rates are going to get. And let's face it, we all need to own a home. That's the American dream, is to be a homeowner. The tax benefits of it and the privacy and just the flavor of it is what we all aspire to. So I'm here to help you and answer any questions you might have about the mortgage business. I do consider myself a resident expert at 21 years in every loan available. So again, I appreciate being here at the Transformed Men's Conference, and I look forward to your questions.
Thank you very much. Nice to have you. Thank you. We appreciate your time.
Thank you very much. And I think that's a great introduction across board for everyone. I'm going to kick off with the questions, but please, as everyone has questions, you can come to the back here. We're going to stay in here just to avoid the interference. Can you hear me? Okay, maybe
Yes.
better now. Yeah, so we're going to stay back here to avoid or to minimize. But I'm going to kick off with a question. We talk about home ownership as people say that's the primary way of building wealth, right, in America. When is the best time to buy? Is this a high? Is this a low? You hear people talk about things like, this is a seller's market. When is it going to be a buyer's market? And the like. So that's probably a question for you, Paul. And for, I have a brain freeze. And for the attorney, you talked about paying your children. You know, everyone, you can set up a sole proprietorship and you can have your kids do a few things in the house, mow your lawn and then blah, blah, blah. What do you have to do to set that up? Do you have to set up a company, put them on a W-2 and the likes? What do you have to do? Please help.
Yes, you do not have to set up a company to do that. If you're a sole proprietor, you are your business, and you can deduct them in your taxes, you can itemize those expenses and give your children a W-2 at the end of the year, or you can just itemize it as an expense in your taxes. But there's nothing to set up if you're a sole proprietor. If you want to set up as an LLC, that is when you need to officially register something with the Secretary of State. It's a very, very simple process. You can register an LLC on the Secretary of State, and the only difference is that if you register an LLC and you're by yourself, you're still like a sole proprietor. So what I tell people is that, if you want to register an LLC just for the formality, it's good so that if people sue you, just in case they cannot sue you individually, they have to sue the LLC as a general rule. So your personal assets are shielded from lawsuits, because you never know. There's people out there, it's a very litigious society, unfortunately. Anyone can go to court and file something and try to take your money. So that's the benefit of opening an LLC. But if you're one of those businesses where maybe you're a consultant, for example, there are a lot of consultants, there are a lot of IT people out there. I always recommend any IT person, any doctors who do consulting work, if you can negotiate a 1099, that's always the best bet, because you get 100% of your money versus a W-2. Although a lot of those employers have restrictions in whether they can give you a 1099 or W-2 based on, Department of Labor guidelines. So if it's one of those situations where you can get a 1099, you can do that, but you do not have to register anything. You just have to itemize it as an expense on your tax end of the year. Kids help around in the office. They help you. It's even encouraged. That way you can, once they become 16, obviously you don't want to employ 12 years old. That's violation of child labor guidelines. They have to be 16 years old and older, and you can also have them do work around the office. And I encourage all my clients to do that. Don't give them free money. It's always good to develop hard work, and that is a way where you're even teaching them to be able to handle the money you will pass on to them. So you don't have to register anything. Once you're 16, you can itemize it. You can give them a W-2, just like they work in McDonald's. I always tell them, why are you going to send your kids to go work in McDonald's when you got a business, you got an office, you can pay them 10 hours a week, $15 an hour. You're going to give them money anyway. Might as well let them do something for it. You can let them earn.
So two things to add to what he said. Number one, now this is from a wealth building standpoint, because in this country, America is a capitalistic country, and the only people that will maximize the benefit of this country are those who are capitalists. Beginning, end, full stop. In fact, the laws in this country are even designed intentionally to favor those who have a capitalistic instinct in this country. And that is why I would always encourage everyone, if you can, to go through the route of LLC. I have an LLC. Now, he's right, you could do a sole proprietorship on LLC, but I will always advise people, because with an LLC, you get to do more in addition to what a sole proprietorship can do. So from what the lawyer has said is 100% correct. All I'm adding is, rather than remain an LLC, rather than remain sole proprietorship, open an LLC and still do what he said. Because you don't know the future. There may be other things you want to do in the future. The LLC will be able to accommodate that. So that's number one. Number two, from an IRS standpoint, there is a cap you can give your children from what he's talking about. There is a cap. I think for 2023 is $14,000 per child. So what he's saying is correct. So, but it's not like you can pay them 50 grand, no. I believe for 2023, the maximum you can give a child doing what he described is $14,000. And you can actually go a step further. If such a child is getting 14 grand, open a Roth IRA for that child. I think maximum for this year, Roth IRA is 6 grand. So you can open a Roth IRA for that child, put the money in an index fund for that child at the age of 16. and then that grows, you know. You have a millionaire child before they are 30, before they are 35, you know, tracking the entire stock market. So that's just something to add to what he said.
Even just to piggyback on that, in addition to maybe an Roth IRA, there are other things you can do for your child called annuities. Annuities are good options where you can put your money in the what we call the annuity for a term, maybe 2 years, 3 years, 4 years, and you have guaranteed returns. You don't lose your money. It's almost zero risk. You go with a highly rated company, and so say you put the $14,000 or $12,000, whatever it is, can put in like a 3-year, keep putting an annuity. So by the time they're 21 or 22, that money, or 25, that money could be, at that time, if it's 14,000 a year, it could be, by the time it could be like 50, 60, $70,000, you know, depending on the annuity you put. So,
You know, I would like to add to that as well on the home financing side. I've noticed in the years a lot of business owners, LLC, sole proprietors, S corps, etc. They will put the title of their home in the name of the business for the very same reason he suggested, is protection of your assets. And now to refinance or buy a home, you have to put it in your individual name and your social security number. However, once you're closed and you have the keys to that house, you can file what's called a quitclaim deed and put it back in the name of your business, and now you're protected and nobody could sue you for your home. And they can only go after the business part. So it's a very common thing to see.
I have a question for you. So, does the bank, if I'm changing the name of my house to my LLC, like in my own case, for example, does it include a bank or does not include a bank in the process?
It does not, unless you go to refinance that same home and the name's changed on the title, then you have to move it out of the business name back into your name, reclose, and then you can move it back into the business name.
Otherwise, it's all just legal documentation that needs to happen.
That's all. Yeah, we're none the wiser, basically. If you closed your home in your individual name, we don't look to say, oh, well, now are they in the name of a business and they're going to recall your mortgage due payable?
Okay.
And nobody follows
Banks
it.
won't do
We
that.
don't do that.
And that's the added advantage of opening an LLC as opposed to being a sole proprietorship. Because being a sole proprietorship just means that it's my name, Lekon Ajibowo. And it's me. It's different from my LLC because my LLC name is Henry Ajibowo LLC. So if I put it in my LLC's name, that's another advantage that one gets, because then you open this world of opportunities, you know, that is now all of a sudden available to you. So I would always say LLC is the way to go, and still do everything that the lawyer talked about and Mr. Paul talked about.
and the reason he's right, the reason I said sole proprietor is just to give people that option. So it's not like you feel like you have to go register something. You can start from somewhere. You are a working business. So just walk around from the beginning. You're a business itself. You can still make deductions. LLC is just better. You have more deductions. Then you can go one step further and do an LLC S corporation.
Yes.
You can have the best of both worlds, and it's very, very simple. All you need to do is file a designation with the IRS that makes you an S corp, and the IRS will no longer treat you as a sole proprietor anymore. Because if you have an LLC and you're by yourself, we call them single member LLCs, the IRS still looks at you like a sole proprietor. The only benefit of that is that you don't have the legal, people cannot sue you individually, so you have legal protection by having an LLC. And there are other types of businesses you can have. You can have partnerships if you want to partner with somebody. Have a lot of, especially for a lot of doctors, for some reason, people like to sue doctors, medical doctors. Once they hear MD, they call me, hey, he's a doctor, sue him. I say, he didn't do it. Hey, they'll pay. They always think, I always recommend doctors to protect themselves more than anybody else, because, you know, it's just a litigious world out there. Once they hear MD like this, they say, sue them, sue them. They have money, whether it's medical malpractice, whether it's just for anything malpractice, just for walking. Sometimes I've heard some people come and say, "Oh, he looked at me some kind of way," but he's a doctor. He has money. But I don't know if you experienced that.
Needless to say, which explains the reason why I have an LLC. I said, yeah, so that's why I have an LLC. Well, yeah. The other thing about the LLC is that you actually can own a lot within the LLC, like we talked about. For example, you can own and run your own 401k through your LLC.
That's true.
There is something called an individual 401k / solo 401k. I have one in my LLC because I am the employer and I'm also the employee. So I get to open the solo 401k for myself and I get to contribute maximally, annually for that matter, for the employer section and the employee section. So I'm getting the best of both worlds, and the law allows me to do that. So again, I go back to what I said before. America is a capitalist society, and the laws are meant to benefit people that have a capitalistic instinct, period.
Awesome. No, this has been awesome. Thanks so much for that background. And speaking about LLCs and other business types, before I pass the mic to Pastor Obin, there was a question around what's the difference between S-Corp and LLC? I think someone had that question. So
Yes.
if you could please clarify
I can
the
answer that.
differences. Yep.
So LLC just means you register with the Secretary of State as a limited liability company. You have protection from being sued individual. An LLC S Corp is what we call, you file a designation with the IRS, you're now designated an S Corp. You have flow through taxation. So you only that company is only taxed. The individual person is not taxed. My business, I'm an LLC S Corp. So you only tax one. So if they tax me, but if you have an else, you have to pay yourself. You have to be on payroll. So if I'm taxed, the tax is supposed to go through the company, flows to me. So you're not taxed twice. So there's added benefits to having an S corp, but there are more requirements you have to do. I.e., you have to pay yourself a salary. So if you have, the payroll to pay yourself a salary and make deductions, it makes sense to do S corp, and you have more other tax benefits with S corp. So it's having the best of both worlds. You have LLC, and you have a corporation. Like an incorporation, because you can be an incorporation instead of an LLC. I do not recommend small business to do incorporation because there are requirements you have to do, like having meetings, and you have to have people who are part of the corporation. With LLC, you don't have to do all that. But if you be an S corp, you get the benefit of a corporation, like a big corporation, without having to form a corporation, and you have the flow through taxation that the corporation has. So but if you just do a corporation itself, you get to tax twice. The IRS will tax the corporation, and they will tax the individual people who are being paid. But if you're an LLC S corp, they're not going to tax you twice. You get taxed once, and you still have the LLC, and it's just easier to do for small businesses. Even enterprise right now, a lot of those big companies are trying to get away from being corporations because it's a lot of requirements that you have to do, filings and all that stuff that I don't recommend. This is.
Okay, thank you guys. I have a couple of questions for the attorney and the loan officer. First, for the attorney, would you please explain to me the process for patent registration and trademarking?
And
I'm not done. I'm not quite
okay,
done.
sorry.
I want to know, is it possible to do it yourself, or you have to have an attorney do it for you? To just park that on the side. Then for the loan officer, do you guys finance commercial real estate?
Yes, PNC does commercial real estate. I personally do not. I'm only on the residential.
Okay. Backing over to you then.
Okay.
We do it, but I do investment properties as well, just not commercial investment.
I'm interested in commercial real estate.
All right, let me speak to that. So when it comes to commercial real estate, we do But that will fall under the business. So that would fall under the business when it comes to commercial real estate.
So please, patent registration and trademarking. What's
And
the
just
process?
coincidentally, 99.99% of our attorneys do not do patents. So fortunately, I'm an attorney who are also registered to do patents. I mean, I don't do that as much anymore, but I can tell you pretty much for patents, it's most people anyone can represent themselves in anything. So the general question is yes. The other question is, can you do it properly? Patents are more complicated. So with patents, it's filings will be before the patent office. If it depends on the type of patent, we have a design patent. That one is easier to get, and you have utility patent. Utility patent just means you're protecting the way things work. Like, for example, a patent for the way a gear changes in a car, the way things work. Design is the way things look, Like, for example, an iPhone. Every iPhone that you've seen has a patent design. So the design, the way it looks, and they can file it. So anyone can, in theory, file a patent, but it's just very, very hard for individuals to do. With trademarks are a little bit easier to do. Individuals can file trademarks, and trademarks are recommended if you have a name that you're using in business to protect that name, because there are a lot of people out there who like to steal your name, and there's been a lot of trademark disputes lately. But if you have a name that you're using, you can register it with the trademark office, which gives you national protection all over the United States. If you do not register it, you only have protection in your state. You still have protection, but it's restricted to state, your geographical area. I actually had an issue like that a couple of days ago where a big company in Texas were trying to tell one of my clients here to stop using a name. Well, my client had a trademark registration, but they were using it in Texas for like 50 years. My client just started using it in the last 5 years in Georgia, but the business in Texas did not have trademark protection. So they could not stop my client from using the name here. They can only stop him from using it in Texas. Had they registered, they would have been able to stop my client. So there's benefit to trademark registration. So you can do it yourself, but it's not as cumbersome as a patent. A patent is very, 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 very difficult. And that's why the law requires attorneys who do patents to take another exam before they're registered to do patents. Process for trademark is, first of all, before you can get a trademark, you have to have you can get two types. You can your name has to be something unique. You can't have a generic name for a trademark. If it's a generic name, it's not going to be allowed. So if your name is unique, not generic, then you can file for trademark application. Once you file you file it on the trademark website. There's a way, if you just Google file register trademark, you can search the trademark to make sure no one else has a name. Because if someone has a name that is similar to your mark, the trademark office may reject it if it's going to cause confusion with another person's mark. For example, if you have Walmart and you want to go register Walmarte, something like that, or Walmart with 2 T's, they say it's going to cause confusion. So if it's not going to cause confusion, you can get it registered. If it's going to cause confusion, then they reject it. And there are some names that had been trademarked before that they canceled their trademark because it now became generic. For example, aspirin once upon a time was a trademark. It's no longer a trademark. Elevator once upon a time was a trademark. It was canceled. It's no longer a trademark. Sellotape, Teflon, elevator, all these things were once upon trademarks. Because the name becomes so widely used, they're no longer trademarks. So if you have a generic, you cannot trademark jump, for example, because it's generic. You don't want to take out of the English lexicon. Sure, sir. It's okay.
Can you trademark a logo to differentiate it?
You can trademark a logo. Logo is different.
So if you trademark a logo, you can use it with a name even though it's a conflict in the name.
Yes, you can use the name, but the logo is different from a mark. So if you trademark a logo and it doesn't cause confusion with another person's logo, you can. But the standard is still the same. If your logo will cause confusion with someone else's logo, then they can reject it.
What I'm asking is, there's a conflict with the name in the event that someone has something very similar. If you have a logo and trademark that logo, does it sufficiently differentiate that name to make it stick?
What they would do is that they will allow the logo but reject the name.
Okay.
That's what they would typically do.
Okay, thank you.
Well, thanks a lot. That's very enriching. I would also encourage folks here questions along those lines to contact Bracken directly. Sure. Well, thanks.
Thank you so much to our panel. And I have is for Mr. Akin, the attorney. So I know they said you had mentioned that you get an LLC for like protection, but at the same time, like we've seen in a lot of court cases, I think I've been to a seminar before, and the person said that LLC, I think there's an acronym for it that says large lawsuit coming, right? So that you are not, entirely fully protected from probate, right? And they could still come after your assets, especially if the assets are under that business name. Say, for example, even though your house is not under the business name, but you are paying your mortgage from your business account, right? You are still subject to some kind of, liability or probate. And a better coverage will be, putting it under a trust, right? So maybe you can also speak about that aspect as well.
Yes.
Then my second question is for the PNC bank. When you say you do commercial, mortgages, right? So, for example, I want to buy a multi-family or a commercial property, right? Do you guys fund that? Sure. Thank you.
I guess you can go first.
Yes, we do have a separate department for commercial lending. Anything over 4 units is considered commercial, or any type of warehouse to be used as business would be commercial. But as a residential side of the mortgage, it covers condos, second home, vacation home, primary residence, up to 4 unit quadplex. So duplexes, 3 units, 4 units are all residential. Anything over that would jump into business banking or commercial lending.
And just to add to that, so when it comes to commercial, the commercial that we will do is where you have to occupy a certain portion of that building. So usually we do owner-occupied real estate. So we're looking at least 25% occupancy of that commercial building. When it comes to a housing unit where you have residential customers, that would not fall under commercial real estate for us. It has to be like an office building or, an office or warehouse, something that you intend to let, but you're going to occupy a certain percentage of that building.
So to speak to Brother Rollins, that's a very, very good question, and it's a question that we hear a lot that has a need in terms of LLCs and your assets. So when we say we form LLCs, you can form 10 LLCs. So typically, to protect the asset, if you want an LLC, the LLC you buy your assets, your houses, is going to be is going to be different from the LLCs you're doing your business name under. So if you have Roland A LLC, your house is under that. You form another LLC, Roland B LLC. That's when you're going to keep doing business at. So they sue that LLC. They can't come after your Roland A LLC where your house is protected. So it's not one blanket LLC that you have everything in and you open to do. We don't do it that way. It's set up to where the LLC that has your assets is completely different from the LLC where you're running your business. So if that LLC is being sued, a lot of my clients just frankly just shut it down and open another one. If you're ready to let go of that LLC, it is what it is. It's the law. You can chase them but they can't come after you individually because a lot of things are tied down to you individually. Your Social Security, your retirement, maybe your house, if you have it in your name, or whatever it is that you have, they can come after you individually. You can't just walk away from you. It's easier to walk away from business. And a famous businessman is Donald J. Trump, who has maximized the laws of the United States to his benefit. And the people think, so he walks away, he declares bankruptcy, he walks away, opens another LLC. It's as simple as that. When it comes to trust, that is another way to protect your assets, which we recommend a lot of people to do. But there are advantages to trust, there are also a lot of disadvantages. For trust to be valid, for example, a lot of doctors that I've represented, they have had trusts, but you have to have a trustee. A lot of times once you open a trust and the asset put in the trust, in order for it to be valid, you can't have control over that trust anymore. You have to have a trustee who makes decisions, typically for other people. So if you have kids and you want to give them your house and you open a trust and you put your property in that trust, for example, Roland A. Foundation Trust, no one can come after those properties in that trust, but you may not be able to sell that property if you need to cash out. There are going to be restrictions because you have a trustee managing it. Sometimes they'll put a friend, family member as a trustee, and they can legally make decisions, because if you now say you don't get along with them anymore and they want to start controlling, they're the trustee. So it's no longer, so there are restrictions to what you can do as the person. You can't open a trust and put yourself as a person managing the trust and they can make decisions, and no court is going to hold it as a valid trust. Does that make sense?
Yeah. Question. So can you not fire the trustee since you're the one that named them in the first instance?
Yes, you can. But, they can also come up to you and say for bad faith, or you try to get them to do inequitable stuff. So you can technically fire a trustee, but, it gets, because technically trust is really something done for the benefit of something, for someone else. That's the definition of a trust. So you hear trust fund babies, these babies. Well, there are other ways to do these things without having to go through the trust. But if you want it, usually like Arthur Blank, he has a lot of trust where he puts a lot of things for his kids and for his family. He just calls it a family trust. So assets that you know you're not going to get rid of are usually recommended to put in the trust. For example, say if you have like a family house, then you know that you want to keep this thing for long-term purposes, then it makes sense to do a trust. Then you also have to be generating money to maintain that trust. There are fees you have to pay. There are companies will manage trust for you. There are fees to have to pay to manage a trust, and the trustee sometimes has to get paid. So trust is not always prudent if it's not a large asset situation. But if you buy a little $100,000, $200,000 house, it's not really recommended to put in the trust. Just put in an LLC. Open an LLC for the house, pay your $50 a year, and you'll be good to go.
Okay. So I'm guessing in addition to the fact that, it's a question for you still, I'm guessing in addition to the fact that protection from lawsuit might have been one of the reasons why Bro Roland asked the question of trust. And obviously you're making the point that particularly if it's not a big estate, you can still keep it on an LLC and still be good. The first question is, does it then mean that in lieu of the highly litigious society that we have, LLC is about the only option you have available in the absence of trust to protect from litigation?
Yeah, that's not that many options available. Yeah, LLC is probably the only other option available. But for a lot of my clients who are older, who find love late in life to a very young woman, we always recommend trusts for their kids. We have a lot of 80-year-olds who find a 20-something-year-old with millions of dollars in real estate, and they're so much in love. Those ones, we don't allow them to get married. We do not want to do a prenup. We just do the trust route. Those ones is a mandatory. They have to put everything in a trust, because otherwise the kids get nothing. The new 20-something-year-old girl just, and it goes both ways too. We have a lot of older widows who have inherited substantial assets who fall into the hands of young gigolo. We recommend trust. So we also do it for lawsuits. We do it for marriage protection in the hands of unscrupulous spouses out there. It's just the real world. We do it for those ones. But the thing is that trust is much secure. LLCs can still be broken into. There's something what we call pierce in the corporate veil. If you have an LLC and you're commingling funds with your personal assets, a very, very smart lawyer can try to come after that LLC and say that it's just an alter ego of you to trying to break the corporate thing. But the general rule is that the LLC is shielded from personal. If they're trying to come after you, they can't come after the property that belongs to another entity, a separate entity, especially if you're running your business with a different entity. It still gives you maximum protection because you don't own it. The LLC doesn't own it, so there's no legal basis to come after the property.
So what is the legal recourse of an individual who indeed does have a legitimate claim on somebody else, and just because that other person, quote and unquote, has been smart enough to have everything else in another LLC's name and nothing else in the so-called LLC that is being sued, what is the legal recourse for someone who does have a legitimate claim?
The legal recourse is prayer. That is why we recommend people, before you do business with somebody, make sure they're very, very credible. Make sure they have insurance. Okay, insurance.
Awesome.
So if they have insurance, you can go after them.
Absolutely. That's why we recommend to check insurance, especially with contractors. A lot of people fall victims of contractors. They'll give them $200,000 and they just disappear.
Is there? I'm sorry. One last question. Is there a cutoff? You talked about if it's a $250,000 house, you should just do an LLC and be good. So would you say, is there a wealth level where you would say, if you're beginning to hit this number, you may want to begin to consider trust?
Maybe $500,000, $1 million and up. It's just a preference whether you're willing to give control a little bit of.
Yeah,
control.
I know, I understand all that, but from what you said, it would seem to me like you will be encouraging that because you said if it's big, before if it's big,
dollars would be a good threshold. $1 million and up.
Anybody that has an asset of $1 million and above should be thinking of trust.
Yes, if you're in a high risk situation, That is why if you're a business owner and you think you could be sued in a high risk business, it's always good to have insurance. For example, doctors. Medical malpractice insurance is the way to go. Otherwise, one lawsuit can bankrupt a gynecologist, for example. So you want to do the medical malpractice insurance. Or if you can do liability insurance, general liability. If you have a store, retail store, you want to do liability insurance, let the insurance absorb it. So that's why people, when I said earlier, as a preamble before I started, I said all these things work hand in hand. Insurance is very, very important. Investments, saving, protection, taxes, they all go hand in hand to manage your wealth and keep your wealth.
Is there any limit to anything you can put in a trust?
There's no limit.
Including an investment portfolio, stock portfolio?
You can put anything in a trust. You can put anything in a trust. Trust is just another ownership. You can put investments, real estate, savings. You can put anything in a trust. Trust is just a legal entity created for the benefit of somebody else. You can't touch it. That takes ownership. That's why I have trust fund babies. They inherit millions of dollars in cash, savings, bonds, stocks, annuities. You can put anything in a trust. Anything that has ownership, you can put in a trust. And for example, like I gave you, a lot of our older clients will find love later in life to a younger lady. We always recommend putting everything in the trust.
And just to add to what he's saying, so like in the bank, we do have a private wealth team that would manage your trust for you. So if you have a certain level of wealth, right, we can take over that trust to where, your designations, your will, everything is done by the bank. So you don't have an individual who is controlling that trust. So that gives you a level of safety also, or a level of comfort where you know that if you pass away tomorrow, whatever guidelines or whatever will that you've set, right, the bank would work in line with that.
And he's right. A lot of wealth management companies do that. Banks do that. Chase investment folks do that. They call them wealth management divisions of banks. Usually the ones who do that. You can also liaise with attorneys who would help do that. We have attorneys we refer to who do We do the trust, estate and trust attorneys. They help do that. They create those trusts. And I also recommend people, if you can, to get life insurance because it's also a big deal. Most Nigerian or African clients, when I tell them get a life insurance, they say, hey, you want to kill me. So whether you get life insurance or whether you don't get it, it's guaranteed for human beings to die. So getting life insurance is not going to expedite your death. Is at least, there will be some kind of protection for your family or your kids. Some of them they can pay off the house. They even have insurance that will pay off a mortgage if you die. So,
Just to,
Awesome. This has been really, really great. Sorry, were you going to say something?
yeah, I was
Paul?
just going to say something about life insurance. So,
So, what if we come back to life insurance?
Okay.
Because it looks like there's some other questions around, mortgage, around, real estate. Before I pass the mic over to my brother here, there are two questions that would go to Paul and Stephen. And that will be, one, when is the best time to buy, right? I mean, there's some people thinking about, does it make more sense to rent, with rates being high, versus buying? So that's one question. And the second question will be to speak about HELOC, and how that might be, if at all there's any benefit, to structuring your mortgage finance. So those two questions.
Oh. Okay, very good, thank you. Here's how I look at rent versus own. Some people think they should wait until rates get back to 2.5% and 3%. That may never come back. When you pay rent, guess what your interest rate is? 100% of your payment is going to the homeowner, zero to you. You have no equity, no principal, nothing. You just laying $1,500 rent on the table and walking away. So to me, rate shouldn't be the deal breaker. Now, rate's gonna jump in play to qualify because you wanna be comfortable with your payment. So you're not, if you're currently paying $1,500 in rent and you're very comfortable doing that, then you might be able to stretch and get a $1,700 mortgage. Even if it's at 6%, 6.5%, it's better than paying 100% without doing it. And housing, historically, although there arguably are other investments that are better, but real estate investments have always been producing at least a 2 to 4% increase per year on your return of investment. So you can't go wrong by buying when the time is right for your individual life. There's no better time. Obviously, when the industry's better, that's the market picks up. Summer is usually a peak season. The feds tend to drop the rates. Real estate agents get busy. People want to move. They're changing schools. They got different jobs. So house pricing becomes very competitive. So spring and summer is the busy season. But for the first question, don't wait. Your rent's killing you at 100%. And it's a lot easier to qualify for a home. There's so many programs available that the public is just not educated. And that's kind of what I like to do, is go around and let people know, if I can buy a house, anybody can. I mean, I worked on my own credit, I've done my own testimony of it, and I'm living proof it can work. The second question was regarding equity lines. That is the #1 mortgage product today. I would say, honestly, 90% of my volume in my pipeline right now in sales is equity lines. Only 10% is probably home purchase. The reason equities become so hot is rates are higher, so everybody already refied mostly to this 3.5, 3.75, 2.5. They don't want to touch that first mortgage. That rate is probably the best it's going to be. However, they need some cash out. You've got home improvements, college tuition, cars are even higher interest rates now than equity lines. So people are using the equity line of credit as though it was a replacement to a cash out refi. The beauty of it is there are no closing costs on equity line of credit. So whereas a mortgage and a refinance of a mortgage typically run about 2.5% to 3% of your loan amount would be your closing costs, on an equity line you can go up to $700,000 and pay zero cost. There's $50 a year to maintain that account. That's it. You have 10 years to use that money. So you only pay for what you use, like that commercial on TV, that insurance commercial. But anyway, equity lines are super popular now because home prices have elevated nationally. During COVID and the last couple of years, house prices rocketed. Everybody's home's probably $35 to $50 to $100,000 more today value than what they had. You can pull up to 90% of that home value out, use it for whatever you want. Debt consolidation, home improvements, you name it. The banks don't even ask. It's your money to do what you want with. It's your equity. And you can pick from 5 years to 30 years to repay it, but you have 10 years that you can play with that money. Starting year 11, whatever that balance is, it's frozen. You can't draw anymore. You'd have to reapply for a new equity line of credit to extend another 10 years.
What is the interest rate?
Interest rates there's two different types. There's a first lien equity, meaning if you own your house free and clear, you don't have a mortgage, you can do a first position equity, which is usually about, if you go over $350,000, it's probably, I'd say 8.5%. If you do a second mortgage, meaning you already have a first lien, depending on your credit score, of course, those rates are probably 8.7. So a little bit higher, but when you think about it, even at the 8s, and they may come back down to the 7s in about 3 or 4 months, your credit cards are at 24.99, 25, 19, I don't care what, none of them are at 8%. So a lot of folks are taking the equity out of their home, even if it's $50,000. That $50,000 in credit card debt is not only hammering your credit score, but it's also costing you probably $600-700 a month in different credit card bills. One equity line pays all those off, and a $50,000 equity line is probably going to cost you $265 a month. Now you just saved $300 a month at no cost, and your credit score goes through the roof because you just paid off 5 or 6 credit cards with high balances. So that's why equity lines are very popular today.
And let me just add to this also. So with PNC, the equity lines that we have, when you have a rate, for example, the going rate right now, you have the option to unlock and relock that rate up to 6 times over that 10-year period. So say rates drop down to 2-3% in the future, you just call the bank, unlock that rate at 8% and relock it at 2-3% and only pay a fee of $100.
The only cautionary tale I have when it comes to HELOC is the debt burden. It's good if we have to draw out equity from our homes for valid reasons, like you said. All good. We just have to be careful in terms of the amount we draw out, because that ultimately becomes the debt burden that we have to deal with in the short term, immediate term, and long term. For valid reasons, yes. As we all know, please let us all remember, the debtor is always a slave to the lender, period. And the less debt we have, the better our prospect of building wealth. because nobody builds wealth from debt. Our number one building wealth tool is our income. And the less money that goes out of our pocket to other people, the more money that goes out of our pocket to other people,
Including IRS.
including IRS, the less we keep. The less we keep, then the less we have to invest to build wealth. So while there may be valid reasons to do HELOC, let's just be extremely careful not to go too crazy about it because of debt burden.
So let me also add this, and I do agree with you. But what I've noticed is a good number of my customers, when they do HELOCs, they don't use it, right? They leave it there so that if a reason ever comes, they know it's available to use. That's one. Two, if a business opportunity ever comes, they don't need to rush to the bank to say, hey, I need X amount of money now. No, they have an open line that they can tap and get whatever they want. When, at the peak of COVID, I had this customer in Sandy Springs that we did a HELOC of $1 million for. And at that point, he had no need for it. We never knew that a lockdown was going to come. But when all the lockdown and all that happened, he pulled on that, did the PPP, and he more than quadrupled his return on his investment. So again, most of my customers, they just leave it there just in case. And at that point, you don't have any debt. You're not paying any interest. You're only paying the annual fee of $50. But if anything ever arises, then you can use that. Another thing that they do is, for some of my customers, is they use that as a down payment for a second property, which they go out and rent and begin to generate some level of income. So I've had customers who, using their home equity, bought 3 or 4 houses and put them under different LLCs, and now they have cash flow coming in from rental income while they are gradually paying their own mortgage and that HELOC.
Yeah.
So, Dr. Leko, I want to disagree with the statement you made that you can't build wealth with debt. You can, depending on what you're spending the money on.
That's true.
Yeah,
So-
yeah. I just want us to be clear, right?
No, well, it depends. See,
Yes.
I know there is that argument back and forth, you know,
Right.
and there's a school of thought that believes that there is so much of wealth you can build with debt, and you can roll in the debt, you can use leverage, you can do all that. Okay, I belong to the camp. I understand. There are 2 camps, and I guess the conversation, Robert Kiyosaki will talk about how you can use debt to make more money. Okay?
Right.
I belong to the camp of Dave Ramsey, whereby, you know, and Warren Buffett, that argues pay cash for everything, and ultimately you'll be wealthy. Okay? So I agree with you from that viewpoint.
Yeah.
But you have to be extremely careful when it comes to debt.
Yeah, that's the word. You have to
Yeah,
be careful what you're
so
investing in.
that you know, Warren Buffett would say that the easiest way for a smart person to go broke
Right,
is to use leverage.
right.
Okay? It is the easiest way for a smart, intelligent investor to go broke. When you use leverage, when you use debt. That does not mean that, you know, you can use debt. I mean, you can buy a real estate, you can, like you said, take out the equity, buy another real estate, you know, but you really, really have to be careful.
Yeah,
so that is what, you know, but because, you know, everybody thinks they can do it. And more people get into trouble than not.
No, that's fine. I just
And just to add to what he said and to reconcile what you're saying, I think you're conflating 2 issues: the individual person versus the business.
Yeah.
A business going broke is different from an individual going broke. I have a lot of multi-millionaire clients whose businesses have gone bankrupt, but they're still rich.
they're still rich. Yeah.
So-
Thank you, yes.
Other people's money is all way to go.
Thank you, yes.
No, that's
Wha-
fine. I just want to make sure that
Yeah,
we
so
get that
that-
clear,
yeah.
right? No, that's fine.
Yeah.
And I do understand where you're coming
And
from.
people conflate it, which is why it's very important. Once you open this business, you want to create that business footprint.
All right.
People have EINs, they go to Dun & Bradstreet, you build that credit history. So once you take loans with a business name. So if something goes sour, The banks deal with it. They have other ways of recouping, but nobody wants to go. But you preserve your own individual name and
Yeah,
Yeah.
that's fine. Thank you. This is not my question yet, but I just want to follow up on what Paul said earlier on about HELOC. Do you have, and I'm quite new, so I might be asking some dumb question here. I'm quite new in America, so, but do you have to take HELOC with the same bank, or you can go to other banks to take HELOC?
You can go to any lender for a HELOC. It doesn't have to be with your primary lender. It's very competitive. A lot of banks are, Wells Fargo doesn't even do them, period.
Yeah,
Some banks won't even touch them because they're not real long-term loans. They're very short-term, and
Okay.
so they're not as, they don't return as much to the
thank
bank.
you. So my question is actually, I've done real estate in different countries, South Africa, Canada. I just recently moved from Canada down here. I'm looking at building wealth, via real estate vehicle, right? Where you have multiple, properties. Some of us, we've looked into, for example, in my own investment portfolio, for example, real estate is the highest form of investment that I have, just because I don't get excited over what I don't know, right? What has worked for me, worked for me, and I try to keep it that way. My question, however, is, hypothetically, let's say I have a chunk of money somewhere, right? I say hypothetically, all right. Let's say I also have equity in property. I got here, bought one, there's equity in it, right? I put that chunk when I came, and I want to leverage on that, right? And I also have other investment. Is there any rule? Because I do know that there's always way around you can play with things, right? If I want to buy, let's say, for example, I have $100,000 or $200,000, right? And I have one property before I want to buy multiple, like say 2 or 3 or 4, right? Of maybe $500,000 each or lower than $500,000. How do I play, and yet I still want to go to the bank to get from there? How do the bank see me, right? Do I have to keep the house for 2 years before I can do this? I just want to, throw more light into what are the rules, do I have to look for, how can I explore that opportunity? That's kind of my question. I hope it's very
Yeah,
clear.
I think I follow.
Yeah,
You can only do an equity line on a primary home or
Okay.
a second home, meaning a vacation, beach, mountain, resort type of home.
okay,
Investment properties, you can't get an equity line on. Anything that draws rent. So if on your tax return, if you've got Schedule E,
right.
and you put an address on there and draw income, that address is null and void from an equity line of credit through the bank. Only your primary home. The way they look at it is if you go up to 89.9, let's just say 90% of that home value,
Right.
that's your max.
Right.
How you spend it, what you invest in is up to you.
But how does the bank now look when I now go, for example, in that scenario that you just painted, right? Let's say I'm drawing out a $200,000 from a property, my primary property, right?
Yeah.
The bank doesn't care what I do with it, but I want to use
do
that.
more.
Yeah, I want to go use that to buy a second, a third one.
When you
How
go
does
buy
the bank-
that second or third one,
Yeah.
it's gonna count in what they call your debt to income ratio.
Right.
Right? So now you've got your primary home payment, you've got your rental properties, net rent,
Right.
that shows on your Schedule E. All of those liabilities, as he had mentioned earlier, is divided by your gross income. That's called your debt to income ratio, and that number needs to be at 45% or lower.
Okay.
You can buy up to 10 houses if you want.
Yeah.
According to Fannie Mae, Freddie Mac, you can buy 10 homes. However, you have to qualify for all 10 homes with your income.
Okay. And what kind of mortgage? Is it conventional? Is it FHA loan? What kind of mortgage will you be able to use to buy this other property?
Whichever you prefer and
So you
qualify.
can-
Everybody's unique. There's conventional FHA, the VA has good home loans. You can get any home loan you qualify for, and what I like to do is I work with the individuals
Right.
to find the specific need that they have, their down payment, their credit score, where they want to live, et cetera. And that's how I gear, here's 2 or 3 products that best fit your specific need. And then we work on those qualifications.
Okay. All right, I think I might have to see you to get some
Question.
more. Thank
So the investment property on Schedule E in the tax return, when evaluating the debt versus income ratio, is factored into that individual's income.
Right,
Okay.
yep, absolutely.
Not just the earned income.
And the other thing interesting too, if you are a brand-new rental owner, a landlord, and you don't have any property showing on a Schedule E, the bank will include 75% of your gross rent that you collect as income. That extra 25% the bank considers for vacancies and maintenance on that home.
Okay.
So they're only going to credit you with 75%. So if you get $1,000 for rent, we're gonna give you $750 added to your normal W-2 or self-employed business. Now, if you have a mortgage on that and it's $750, well, guess what? You just broke even. You're at net zero, basically. You're not paying anything. You haven't earned anything. But a lot of people, especially investors, they love to write off as much as they can because that's what you're supposed to do to save money. You don't want the IRS taking everything. So that's a great way to get around it.
But the person will have to report to the bank the investment property they have if they've not already written it on the Schedule E.
Correct. So when the
For this
bank
to apply,
does the
what you're talking
title
about.
search on a property you're going to buy, and it's in your individual name, that social security number is they're going to do a title search that goes back, it's either 7 or 10 years. It depends. I think it's 10 years that they're going to search your social for homes that you've owned in the past. If that title search says, oh, you want to buy this house as your primary, well, what's this address? Oh, that's my parents' address. I used to live there. I don't live there anymore. They're going to need to verify that in case it is investment property that they can't trace, but it's showing up on your credit history.
And how is this different if you have the investment property in the LLC's name, even though it's on Schedule E? How is that different? If you have an LLC, you make income, but you also have a W-2, so W-2, LLC on Schedule C, and then you have a Schedule E of an investment real estate under the LLC.
Right.
How is it different? Is it still done? I mean, is
It's
it still
done the same
same
way. So we get 2 years of your tax returns as a sole proprietor, LLC, or S Corp. Your 1120S is for your S Corps. Your 1040 Schedule C is typically for your LLC or sole proprietor. We're going to look at the net adjustment of your LLC or sole proprietorship on a Schedule C, and we'll take a 2-year average. So thank God we're past 2020 because all of my self-employed customers took it hard during Corona.
Yeah.
A lot of them just couldn't make it, or if they did survive it, they weren't making any money. 2021 came around, they started being profitable again. 2022, they're even more profitable. This year, they're probably back to where they were before the pandemic. So the underwriters are now seeing a wave of higher qualifying investment buyers, or self-employed buyers, since we use that 2-year average. Back in 21, when you had to do your 2020 and 21 tax return, self-employed individuals had a really hard time getting qualified.
And
That
another thing-
2-year average.
Okay, sorry. I was going to add something real quick in terms of about there are other vehicles of getting loans too. We talked about HELOCs. There's a U.S. Small Business Administration, which a lot of people do not take. they work with lenders where if you want to buy a business, especially if you're a certified minority based business or women-owned business, you're a priority on the U.S. Small Business Administration. They work with lenders if you're trying to buy a business and you don't have the capital to do it. That's another financing option they can go through.
Great. So, I mean, you can all see that this has been a very engaging, interesting conversation. I think I'm going to leave here being a partially qualified lawyer, partially qualified mortgage banker. But I just want you all to know that we'll soon break for lunch. I think we've got maybe another 10 minutes or so, some rapid fire questions. So I would encourage us to keep the questions very short, succinct, and then we'll get answers. By the way, we'll still have Paul and Stephen. They'll still be around. If you have any questions, clarifications. Oh, they come back on Sunday anyway, so. Oh, crap. I said Stephen, his name is Sunday. So Sunday and Paul will be around. So please, keep your questions, and if you want to talk to them directly, you could do that afterwards. Thank you.
Thank you. I think to answer the first question, I wanted to ask, can a 1099 taxpayer qualify for mortgage? I think you answered that.
Yeah, they're
Okay.
1099's treated like self-employed, so it's a 2-year history. Make sure you save your 1099 slip that those companies send you, because they're going to match the 1099 slip to what's on your tax return.
Okay, thank you. The second question is, the requirement for financing a multi-family house, is it the same as a single family unit? The requirements?
What type of house?
Multi-family.
Oh, multifamily up to 4 units, condos, townhomes, and single-family residence all propose a different risk to the banks. Obviously, a 4-unit home is a bigger risk than a 1-unit single-family. However, back in the day, it used to change your interest rate. If you bought a condo, it was 0.5% higher than a house. That's not longer the case because of risk. There are no occupancy types that differentiate your interest rate or qualifying anymore like they used to. They're all equally the same. The only difference is whether it's a occupancy of yourself, your primary, whether it's a second home, or whether it's investment property or rental. Those are the 3 types of occupancies that change your interest rate.
So I got a question. You keep saying primary home, the second home, and then investment property. So are you saying that, or I'm guessing from your standpoint, that after the second home, you cannot continue to say the third one is still my home, the fourth one is my home, or the bank just refuses to recognize a third one as a home, and they feel like it has to be an investment?
Oh, you can change. If you convert your primary, and let's say you upgrade or downgrade and buy a different home, you can make your current primary a rental. A lot of people do that, and there's no really way for us to do. You simply put on your application pending sale, other, you don't know at this point. But if it's not for sale and you're going to buy a second home or an investment property, you've got to qualify for all the properties you want to buy.
Okay.
With your debt ratio.
Oh, sorry. Thank you so much. My question, I'm about to switch it up. My question is tailored towards startups, startup investments. Now, a lot of attention is being placed on properties and property investment, which is great, but what is the role of the bank per se, or what are the metrics that you give to, if there are any programs given to startups that are trying to seek funding at a time? Is there anything that the bank have? Does anything that the bank have for startup founders meeting certain criteria, at least having paying customers, just to help them scale up to the next level, or that's just basically on investors? That's my first question. And the second one is, what's your advice to an individual that is actually pursuing a startup company and is actually paying out of pocket? What route should he take? What role does the bank have in supporting that, basically? Thank you.
Well, I could answer the investment part, but I'm not probably the expert on the second part of the question.
I can speak to that. Yeah, I mean, I don't know if you've heard of the term angel funding. So a lot of startups usually use angel funding, and angel funding is literally the name it is, getting money from an angel. Somebody you know, family, all those people. That's one way to look at it. And I mentioned the SBA earlier. So the SBA is what I always recommend to a lot of startups. The Small Business Administration was developed to focus on small businesses, 500 employees or less. So that includes startups. So that's why it's not called the Small Business Administration for a reason. That's always ask people, especially clients who set up a business. Once you decide whether it's an LLC you want to do, you do the LLC, do all your stuff, and you start your footprint, your business footprint. Maybe start with a little secured credit card under the business name. You do, that's what we call Dun and Bradstreet. You can have a digital footprint, just like people have Equifax. You have TransUnion for individual credit scores. They have Dun and Bradstreet. That is the credit score for businesses. A lot of people don't know that. You can you have a DUNS number, open your Dun and Bradstreet account. You can monitor your business credit score. And you can also certify as a minority. Once you certify as a minority, once you go to the SBA loan, SBA have partner banks that specialize in giving loans to startups and small business. And I've had several startups who got loans up to $1.5 million. However, it may come with a lot of things, maybe collateral, depending on how much the loan is. If it's a $100,000 loan, it's not that hard to get. The $200,000 loan, a lot of people trying to open restaurants, lounges, all those kind of places. They usually will go to the SBA to get loans, daycare centers, any kind of small business stuff. So depending on what your startup is, even for tech companies, apps, all those people go through the SBA and they usually are successful, especially if it's below $100,000.
So let me just, speaking from a bank's perspective, yes, the SBA loan is there for a new business. We would work with you regarding getting an SBA loan. It's very detailed. There's a lot of paperwork that has to go into that. And I think that's where most new business find it very challenging, is providing those documents or those paperwork to qualify for that SBA loan. But that is something that we can work with you on. Secondly is just getting a regular, business credit card. Again, anything that has to do with a business loan from the banking perspective, we're gonna look at your personal credit score. I always tell people 90% is your personal credit score. If your personal credit score is not where it should be, the loan would not go through. Now, as a startup, if you're buying over another business, we can fund that, right, without going through the SBA. But we're gonna need docs from the business that you're buying. So again, if it's a profitable business, they have good financials, good cash flow, that is something that the bank will say, yes, we can buy that based on the fact that you have experience in that industry, so that way we know that you can continue to run that business successfully.
And if the business you're buying has real estate, obviously that real estate, or if you're buying a business that has a building, that can also serve as collateral. So a lot of my SBA small business clients have also been able to successfully get loans if the building has, if the business they're buying comes with a brick and mortar building, or like you said, a business that's been generating money, i.e. a restaurant. Maybe the person just wants to retire, or daycare, or whatever it is that they're trying to buy. That's what we call, the term they use in the financial world called creative financing. They use all kinds of ways to make sure that you can get a loan, just to be, they're very creative in making sure that you get a loan. Or call him, he's rich, he'll give you a loan.
Yeah, with an interest rate. Yes.
Angel. He's
But
can be your
interest rate-
angel investor.
Interest rate, I'll charge you.
And most importantly, one thing I was going to add that a lot of people do is that most important with any wealth stuff is diversity. There's savings, there's stocks, there's bonds, there's real estate, there's annuities, there's a lot of all these things. And right now, there are a lot of high yield savings accounts for those who have a lot of cash. we don't know what to do with it in the interim. There are high yield savings accounts that pay up to 4 to 5%. I mean, the PNCs don't pay that. You're not going to get that. But there are a lot of non-brick and mortar that pay 4% for zero risk. It's almost a no-brainer in this day and age not to be getting 4 to 4.5% in high yield savings with FDIC banks that, Goldman Sachs has one. Marcus by Goldman Sachs, they're paying like almost 4%.
Yes.
If you have 100, that's $4,000 right there every year. And the traditional brick and mortar will pay 0.02. There are CDs paying 5%.
So
Zero risk.
So right now, if you have liquid money that you have no plans for, like the lawyer said, online savings account, Marcos from Goldman Sachs, currently is paying 4.15%.
It's a no-brainer. Guaranteed.
Online savings account.
Yeah.
By the way, any account, savings account, online, as long as you see the logo FDIC, is up to 250. Yes, you're secured.
Yeah.
Then you open multiple accounts. If you have I'm just saying, if you have $1 million in liquid, just put 205. So if you go to nerdwallet.com or bankrate.com, if you Google online savings accounts, Barclays Bank online is offering 4.0%. Marcos online is offering 4.14%, 4.15%. American Express online savings account is offering 3.75%. Thank you very much. That's just 3 right there.
Yeah.
Discover Online Bank online savings account is offering 3.5%. That's 4 right there. If you do immigrantdirect.com, it's offering 3.5. These are online savings accounts that the minimum they are offering is 3.75% online, and it's FDIC insured. The full faith of the federal government of the United States will back your savings up to $250 per account, per person, per bank. Online. Don't go into the brick and mortar bank. You won't get nothing out of it. So, again, I like to tell people America is a capitalistic country, and the rules of the game in this country was and is still continuously being intentionally designed to favor only those who have capitalistic instinct and act on them.
And there are certificate of deposits paying 5%.
Absolutely. Absolutely.
5%.
Marcos is paying 5.05% CD.
CD.
The easiest way to find it for me was I went to Google and I typed in high yield savings.
That's it.
And I had page after page after page. Some of them said, for $10,000 investment, you get this rate, 20, 25, 30, 50, 100, on up. It
And
gives
the
you
list
different
goes
rates.
on and on. There are U.S. Treasury bills that paying guaranteed returns. There are municipal bond investments paying guaranteed result.
Now,
return.
with the municipal bonds, please be careful though, because you want to make sure that the municipality you're buying from is solvent. So, for example, yes, please be
He's
careful.
right.
Because, for example, if you go to Chicago and then buy their bonds, where they're having issues with their teachers and all that stuff, you want to be careful, So municipal bonds are actually very good if you can find the right municipality to buy the bonds from. Otherwise, I would just stick to treasury bills.
Treasury bills are amazing.
You cannot go wrong with treasury
It's
bills.
guaranteed.
It's America's money. It's like buying
Yeah.
treasury bills in Nigeria, And there is also something called inflation-protected bonds. Again, being issued by the federal government of this country. Free money. Well, it's not free money. I mean, they pay you good rate. So
Yeah.
inflation-protected bonds and treasury bills. You can do that. If you find a good municipality that you can buy their bonds from, you can do that too. But the other thing about bonds is that, as we all know, as interest rates go up, bond value goes down.
That's true.
So again, I'll be careful. The way I look at bonds is use bonds to protect your portfolio in a downturn market. Market is down now, so you want to be careful. not to have too much of bonds. Don't be too weighted in bonds because, if you buy bonds those that bought bonds, for example, at 2%, 3%, 2-3 years ago, and the bonds were for 5 years, now the interest rate is like 6 now, So those bonds are of less value today compared to 2 years ago. So we want to be careful about that. But a better way to use bonds is just to protect your portfolio in terms of stocks, bonds ratio. So that's for bonds. And of course, you want to be in stocks. Very important. In America today, like I tell people, 87% of the total wealth in America today is in the stock market. 87% of the total wealth in America today is in the stock market. Yet, only 46% of people in this country are in the stock market. It's unbelievable. I don't get it. 87% of total wealth in this country is in the stock market. Yet, less than half of people in this country are in the stock market. Which explains the reason why the top 10% wealthiest people in this country, the top 10% of people in terms of wealth in this country own about 60 to 70% of stocks in this country. So there is something they know that is right about the stock market that the majority of people in this country do not know. So there is a way to enter the stock market and prosper in the stock market. We just have to know the way to get it done. Because there are people that have done it before us, people who are doing it right now, and people who will do it in the future. So, thank you.
Thank you so much. I think we just have time for one last question, and we'll wrap up afterwards.
Yeah, so my question is just clarification on the company's registration. One, we have LLC, we have LSC, C Corporation, and S Corporation. I had an LSC before. I registered S Corporation. So I just want to ask this question in terms of tax advantage.
You asking?
Well,
So,
It's breaking a little bit, but I think I can make some sense out of what
yeah,
you're
but
saying.
again, we want to do it kind of slightly differently. It looks like he might benefit a lot from a fulsome response from you. So maybe once we break out for lunch, you can, speak to him. So just want to make sure that there's enough time for you to provide that response. Okay? So I'll hand it back to you, Bro Lekon, to wrap us up.
Thank you very much for everyone. I'm especially grateful to our friends and our guests from PNC. It's a Saturday. I'm sure you would like to
Thank you.
be with family, and we're very grateful. I've learned a lot. I'm going to have your card.
Please do.
Because, I would like to have your card too, particularly the wealth management section of, managing a trust. And I know I was talking to you earlier about friends who are good at doing trust. It's always a learning curve for everyone, and we all learn new things every day. So thank you very much for coming out, and thank you for the leadership. Thank you all. So we'll go for a break now. Thank you.
Thank you, Dr. Lekon. Thank you, everyone. Just housekeeping again. Paul and Sunday are still in the house. Everyone should have this on their table. It has Paul's information. Please feel free to connect with him, call him, get his number off of it. If you don't have it, I think we still have some more in places. I will bring some to you. So, yes, and Sunday's cards, too, are around. Please connect with them, and let's leverage the opportunities. Lunch is ready. We have some of our guests from outside of our group, that we would like to invite to go to lunch. And then every one of us can also join and have, a wonderful lunch. Right after lunch, we have another round of session before we round up for the day, and that is on marriage and seminar. That is on marriage and relationships. Please don't miss it. Okay? Marriage and relationships. That's what we have right after lunch. All right, see you guys later.
Let's go, Toast.
When life has you playing hurry up, Hertz keeps you ahead.
With Photo Vibrance, you can transform
sacrifice. I'm the one you want. I am your worship. I am your sacrifice. I am your worship. I am your sacrifice. I am your worship. I lift my hands to you. I lift my heart to you. I lift my voice to you. I give it to you willingly. I give it to you willingly. I am your worship. I am the sacrifice. Say receive. That man may lift up holy hands without love. Receive.
We increased our revenue 60%. I think our team had something to do with that.
Cake in the break room. Going away party for Marco.
Who's Marco?
Marco. The moment I found you on Fiverr 8 days ago, I knew I found more than just a freelance web developer. The museum-worthy work in your portfolio, the humility despite your towering reputation. You were coy at first, but you knew it.
I leave me at the altar and say, just me and my father at the altar. Receive. Leave me at the altar with my father. Leave me at the altar with my father. Leave me at the altar with my father. Say, leave me at the altar. Hey, leave me at the altar. Leave me at the altar. I'll be here worshiping all of the days of my life. I'll be here worshiping all of the days of my life. Everybody say, sacrifice all of the days of my life. I'll be here worshiping all of the days of my life. I'll be here worshiping. As the musician begin to play this line, ask the Lord for something. Ask him for something. No one comes here and goes back the same way. It's not possible. I'll be here. Because you have worshiped tonight. Ashabarada kapasi anteleba. I'll be here worshiping.
Do you have any crazy stories that happened in a car?
My first time was in a car.
Was it magical?
No, it wasn't.
We can't make your first time magical, but we can make car buying magical. TrueCar. We make it easy to find your next car. Start by taking the Fit Quiz today.
I saw his glory, I'm the express image of the Lord. Hey, and I saw your glory. And I saw your glory. Everywhere I go, and I radiate your glory. And we saw your glory.
It doesn't work.
Everybody, your goodness looks good on us.
No, but can you hear me? Can you hear me? Oh, okay. Hello, gentlemen. We want to go back for the last session. Please, let's wrap up and go back for the last session. Thank you.
Hello, please, we need to go back now so that we can leave here early. We need to go back now. We need to go back now. Please, we need to go back inside now.
Building your online business? Go to Wix.com and set up your store on a single integrated platform.
Please, we need to go back now.
Add products, showcase them dynamically, and seamlessly track your inventory. Accept multiple secure payments, and design your storefront down to the very last detail. Get all the tools you need. Drive more sales with customizable gift cards and flexible product subscriptions. Retain customers with a point-based loyalty program, email automations, and reach millions with sales channel integrations. Complete your setup with a personalized analytics dashboard. Make smart business decisions and shape the next phase of your business. Build, manage, and grow from one place. Go to Wix and launch your online business today.
We are waiting. Please, we need to start right now. The marriage one. Marriage one. Okay, because time is already time and. Oh yes.